Ladies and gentlemen, good day and welcome to Indogulf Cropsciences Limited Q3 FY26 earnings conference call. From the management team, we have with us Mr. Sanjay Agarwal, Managing Director, Mr. Manoj Gupta, Chief Financial Officer, and Mr. Vijay Veer Singh, VP Sales and Marketing. Let me draw your attention to the facts on this call. The discussions will include certain forward-looking statements, which are predictions, projections, or other estimates about the future events. These estimates reflect management's current expectation about the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause the actual results to differ materially from what is expressed or implied. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Agarwal. Thank you, and over to you, Mr. Agarwal.
Good afternoon and a very warm welcome to Indogulf Cropsciences Q3 FY26 earnings conference call. During the quarter, Indogulf delivered a strong and resilient performance with revenue growth of 17% year-on-year, along with a healthy growth in profitability. This growth is particularly meaningful given the backdrop of subdued crop prices, relatively lower agrochemical demands in some regions, and on overall challenging operating environment. For the 9 months of FY26, we have sustained robust growth momentum through all the quarters, supported by healthy traction in both our B2C and B2B segments. Our performance has been anchored by disciplined execution in the domestic market and continuous strengthening of our distributors' platform. Steady demand across key agricultural states enabled us to achieve volume expansion and deeper market penetration. Our focused distribution strategy, calibrated product positioning, and sustained field-level engagement with farmers and channel partners helped us capitalize on opportunities even as the broader industry faced headwinds. A key highlight has been the healthy progress of Abhiprakash Globus Private Limited, AGPL, in its first full year of operations. During 9 months FY2026, AGPL achieved a gross sales of rupees 54 crores, reflecting encouraging market acceptance and effective execution of our distribution strategy. AGPL now contributes meaningfully to our overall growth. Operational efficiencies, channel alignment, and better product mix have supported margin expansion at AGPL during this period. Looking ahead, we see significant potential to expand AGPL's footprint into additional states, thereby strengthening our geographic presence and widening our customer base. We are making focused investment in expanding our distribution network, enhancing product capabilities, and intensifying farmer engagement incentives with the aim of building a sustainable and scalable platform. From a portfolio standpoint, our diversified presence across crop protection, plant nutrients, and biologicals continues to be a key strength. In 9 months FY26, all 3 verticals have delivered healthy growth, reinforcing the robustness of our strategy and field execution. While the crop protection segment experienced softer growth in Q3, primarily due to an extended monsoon and lower agrochemical offtake in certain pockets, our plant nutrients and biological business continue to perform well and demonstrate strong farmer trust. The growing contribution from these segments highlights the increasing acceptance of our differentiated offerings and the success of our farming-centric incentives. On the channel side, we have consciously worked through the year to normalize inventory levels. While industry inventories remain somewhat elevated, we believe our own channel inventory is now at a more sustainable level. This positions us to benefit from improving demand trend. On the weather side, EI Nino is expected to run neutral through winters, reducing tail risk from extreme anomalies. IMD guidance points to neutral ENSO and less chances of disruptive extremes. Moreover, the draft Pesticide Management Bill 2025 and the proposed Seed Bill 2025 collectively prioritize quality control, mandatory registrations and QR taggings, digital traceability and compliance, and stiffer penalties, which acts as a structural positive for organized large-scale players while creating higher entry barriers for unorganized, smaller competitors. We see good potential for demand in Q4 FY26 and Q1 FY27, supported by a healthier balance in the supply chain and improving market sentiments. We are also making steady progress on our international growth agenda. During the quarter, we successfully entered and received initial orders from multiple new markets like Venezuela, Taiwan, and Sudan, which are expected to be executed in Q4 FY26. These orders are expected to support export revenue momentum and improve capacity utilization during the quarter. These new market entries reflect our focus on building a broader global footprint, diversifying revenue streams, and leveraging our product portfolio in high-potential international markets. Overall, our performance in Q3 and 9 months FY26 underscores the inherent strength of our business model. Our diversified portfolio, strong on-ground presence, and multi-brand strategy have enabled us to deliver growth and enhance profitability despite sectorial challenges. Our new launches, expansion into additional markets, and the strong showing by AGPL provide us with a solid platform for growth in the upcoming quarters. Looking ahead, we are positive about the expectations of normal monsoon, healthy reservoir levels, stabilizing in key crop prices, improving export traction, normalizing inventories, and strengthening rural liquidity, together creating a supportive backdrop for our sector. Against this environment, our focus will be on deepening our presence in core domestic markets, accelerating the growth of plant nutrients and biologicals, scaling up AGPL across more states, and further expanding our international reach. Further, with patent expiry of numerous agrotechnicals between 2024 and 2030, will create significant growth opportunities for the entire Indian agrochemical industry. With these strategic levers in place, we believe Indogulf Cropsciences is well positioned to deliver sustained growth and create long-term value for all stakeholders. With that, I pass on to Mr. Manoj Gupta to elaborate on financial and operational performance. Thank you.
Thank you. Good afternoon. I am pleased to walk you through our financial performance for the third quarter and 9 months of FY26. For the quarter ended December 31, 2025, revenue from the operation stood at rupees 1161 million and an increase of 17% YOY. The growth was driven by a strong contribution from both our B2C and B2B segment, supported by our focused distribution strategy and disciplined execution. EBITDA for the quarter increased by 16% from 117 million as compared to 101 million in Q3 FY21. The improvement in EBITDA reflects sustained operating leverages as we scaled revenue, along with the continued focus on the cost discipline and favorable product mix, including a strong contribution from the higher margin products and from AGPL. Profit before tax increased YOY from rupees 74 million as compared to rupees 46 million in Q3 FY25, reflecting improved operating performance and better absorption of the fixed costs. Profit after tax for the quarter was 39 million, up by 5.6% YOY from 37 million in Q3 FY21. PAT growth in Q3 was impacted by higher tax provision related to earlier years. During the year, we have settled certain prior period tax liabilities, leading to an increase in tax being provided in the current quarter. This is primarily an accounting adjustment and has a one-time impact on the reported PAT for the quarter. For the 9 months ended December 31, 2025, revenue from operation was rupees 553 crores, registering a robust growth of 19.3% YOY. EBITDA from 9 months FY26 increased by 23% from 536 million as compared to 434 million in the corresponding period for the previous year. The improved EBITDA underscores the benefits of operating leverages, tighter cost control, and richer products and segment mix. Profit before tax for the 9 months period at 391 million, up 33.2% from the 294 million in 9 months FY25. Profit after tax increased by 31% from YOY to rupees 28 crores as compared to 21 crores in the same period last year. A healthy growth in profitability for the 9 months reflects the improved earning quality, better absorption of the fixed assets, and strong contribution from AGPL. I'm just giving you the business mix and segment highlights. From a vertical standpoint, our performance in the 9 months of FY26 has been broad-based. Biological registered a growth of 15% YOY. Plant nutrition recorded a strong growth of 23% YOY, and crop protection grew by 14% YOY during the 9 months period. The combined revenue of biological and plant nutrition increased to rupees 56 crores from 47 crores in the corresponding period last year, demonstrating increased acceptance of our differential portfolio and the positive impact of our farmer engagement initiatives. These segments are strategically important for us, both from a growth and margin standpoints, and we are encouraged by their trajectory. Looking at our end user segments, performance has been strong across both B2C and B2B. Our B2C business grew by 16% YOY in the 9 months, rising from 2597 million to 3016 million. Our B2B business delivered robust growth of 26% YOY, increasing from 1736 million to 2194 million. If I will discuss with the regional growth, our UP has grown by 3 times, Telangana by 2 times, Maharashtra by 2 times, and Haryana has grown by 30%. The balanced growth profile underscores the strength of our multi-channel approach. The B2C business continues to provide brand strength, better realization, and closer farmer connect, while the B2B business adds scales, operating leverages, and support better utilization of our manufacturing and sourcing capabilities. AGPL has also contributed meaningful to both growth and profitability during the period, with improved channel alignment and a favorable product mix supporting margin. As MD highlighted, we see significant potential for further scale up in the business of AGPL. Thank you. We can open for the floor for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Maitri Shah with Sapphire Capital. Please go ahead.
Yeah, hello, good morning. Am I audible?
Yes, you are. Please go ahead.
Yeah, good morning. Few questions. Firstly, you mentioned that we have export orders from the 3 countries.
Sorry for interrupting. There is an echo that is coming from your end.
Yeah, is this better?
No, I can still hear it.
Hello?
Yeah, please go ahead. Thank you.
Yeah. So, could you quantify the export orders we have currently in the hand?
Yeah, for these countries, almost is around 4 to 5 crores orders we have in hand.
And what sort of margins are there on this order? If you could give me the difference between the domestic and the export order margins.
Export order margins range from 7% to around 18%.
Secondly, what sort of targets do we have for FY27 and FY26 on the overall guidance and also from the exports, if you could mention that?
Pardon, can you repeat the question?
Yeah, any guidance for FY26 and FY27 on revenue and margin?
Sorry, I cannot commit for any forward-looking figures, but definitely we look, the opportunities looks better, and as we have mentioned that last 9 months, we have grown in all our segments, and we have put the desired actions and desired strategies on place. So we look forward for growth in all the sectors.
Okay, and since our margins are so volatile quarter on quarter, any sort of steady state number you could give that we are meaningful for this year and maybe next year as well?
Your voice is actually breaking. Can you repeat the
Hello?
question, please?
So quarter-on-quarter margins have been so volatile because of the seasonalities. If there's a steady state number we can provide for the full year basis on the margins, if that is possible.
Full year margin, Anuj, you can repeat.
The full year margin trends will be approximately on the same lines, but we cannot commit that what will be, because we are working hard on these things as we have shown in the 9 months. So better margins we are expecting in the next 3 months also.
In the same line this quarter too, or maybe even higher, if you could give, like, not a number, but maybe just an inclination of where we are seeing it.
See, this full year, definitely our margins will grow, but quarter to quarter, sometimes it is difficult to say because the quarters to quarter, it depends on the lot of variations.
But no guidance you can give us, quantify.
No, at present, no. At present.
Okay. Yeah, that is it for my side. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Ram, an individual investor. Please go ahead.
Hello. Am I audible?
Yeah, Ram, you are audible.
Thank you for the opportunity. First, sir, the capacity expansions that we are doing, what is the progress on that? Are we on track to complete them by year end?
Due to this draft situation in Delhi NCR, 2 to 3 months have been impacted, and maybe there will be a little delay in that project by those 2 to 3 months, because maybe by Q1 end of 2027, we will be starting our new facility as well.
Sir, how much contribution will they have to new facilities in our revenue for the next year?
See, revenue figures we cannot comment, but definitely with the expanded infrastructure and with our strategies online, we are looking forward for growth in all the three sectors, especially our B2C business, brand business, where we are planning for some new products as well in the coming year also. And we are looking forward for the expansion with the two companies, Abhiprakash and Indogulf. So with the product basket enhancement as well as infrastructure enhancement, the growth will be there.
Okay, sir. Sir, during the last call, you mentioned that Q4 is relatively stronger. So given the water level availability in Q3, so how was this going and how do you see Q4? Like, I do not want numbers, but you tell me, do you see it stronger Y on Y? How do you see Q4?
See, of course, our last 3 quarters has been consistently growing, and we have done some strategic planning and strategic execution, and the results are before you. All the 3 quarters have been exemplary great. Q4, definitely we are looking forward for growth as well, and having in the mid of Q4, so I think the growth will be there.
Okay, sir. And sir, these tax expenses that we have this quarter, can you elaborate more on that and how do you see them in the coming quarters? So can you explain them a little bit more?
Which can you repeat, please?
Tax expense, which has dented our bottom line this quarter, the tax expense for the previous years.
Yeah, that actually this was a accounting adjustment, and because in the assets and liability side, there was a previous year's tax liabilities were lying. So one time we have cleared it. It will not impact in the forthcoming quarters.
So in the forthcoming quarters, we will have a steady state tax rate, and there will not be any adjustments.
No. There will be no adjustment. This is the one-time adjustment.
Okay, sir. So just one suggestion, sir. A qualitative guidance could be given. Like in the first quarter, you gave a guidance of 30-35%. Then now we are not seeing any guidance. So we just request you to give us a qualitative guidance how company is seeing the growth, so that some idea can be taken about the future growth of the company. So
okay.
On that front, Q4 you have mentioned that our Q2 and Q4 are strong quarters. Q3 is normal and Q1 is the lowest. Now Q4, how do you see it? Do you see it normal as compared to previous quarter fours, or do you see it little bit subdued, like quarter four of the last year and year before that?
Okay, so Ram, this year had been a very unforeseen year for the industry as a whole. You can see the peers as well, the listed peers, and that's the reason that we don't want to give any guidance. But definitely, we want to speak by our performance. And last 3 quarters have been speaking about Indogulf, towards in which direction we are working, how we are working, and where we want to be. So we are more or less now consistent, and even the quarter 3 had performed quite good, and we are happy with the results as well. So the growth will be there. The plans are in place, the products are in place, the network is increasing. Abhiprakash is doing pretty well. As I had mentioned that we will be opening some more states in Abhiprakash, especially in the central part of India, We had already taken some steps for that. So we are looking forward for the growth, but we don't want to give any figures or anything. The performance should speak rather than our guidance.
Thank you so much, sir. The management commented that the performance will speak. It's enough for us. We are wishing you very good luck for your future, sir. Thank you so much.
Yeah, thank you. Thank you so much. Yeah.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Nivendra Shah from Alpha Securities. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. My first question is, by when is the new plant at Badwasani expected to be operational, and what is the contribution that you expect from the same plant?
Okay, so as I mentioned to the earlier speaker, Ram, also, that due to GRAP situation in Delhi, this time the GRAP extension has been there, which is beyond our control. And there is a delay of 2 to 3 months, and we expect by Q1 end of FY27, the plant shall be operational. So there will be the advantage of this infrastructure expansion will be reflected in our performance. We are looking forward for good growth in the coming years, and I think that addresses your query.
Understood, sir. Thank you. Second question would be, there's a lot of traction in the expansion into new geographies that you are doing. So are there any more such expansions planned? And if yes, could you highlight some of the regions?
Yeah, as I mentioned that we shall be opening few more states in Aviprakash Globus in central part of India. Already we have recruited some zonal team, and we are in next few months central part of India, which was yet not started in Aviprakash, that will be started. And in overseas geographies, as I mentioned, 3 countries have been added this year, and we are looking for some more opportunities and possibilities in the coming year in overseas geographies as well.
Okay, sir. Thank you. That's it from my side.
Thank you, Narendra.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Arjun Gupta with MK Capital. Please go ahead.
Thanks for the opportunity. My first question is, sir, what kind of volume growth was achieved in the current quarter? And also, if you could highlight the state-wise contribution to that.
What kind of volume growth?
Yes.
You want to understand the volume growth?
Yes.
Yeah, so broadly, there were no much price impact if we compare overall situation. A little dip was there in few of the products, but more or less it was balanced. So whatever growth you can find, that is majorly quantitative growth only. So the percentage which our CFO has shared, that reflects both value-wise growth as well as quantitative growth. Quantitative growth rather will be a little 1 or 2% more because there is a little average drop in the prices, which shows that quantitative incremental growth is higher than the value-wise growth.
Sure. That's helpful, sir. And my second question is, I think we did not see any new product launches in Q3. I think it was 12 in H1 and 9 months FY26. Is there anything planned for Q4?
No, in Q4 actually the product launches are usually done in Q1 and sometimes in Q2 of the year, because those are the initial months where we do our state-wise launchings and we start the campaigns on those products. So we are prepared for Q1 also this year. 4 to 5 products already we have shortlisted and we are planning. The products which had been launched in Q1 and Q2 this year continues to add value to our top line in Q3 and Q4 as well.
Understood. Thank you. That's it from my end.
Yeah, thanks, Arjun.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Thank you. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer sessions. I would now like to hand the conference over to the management for closing comments.
So I thank all the investors, all the participants today, and we are looking forward for good closing of this year, and we have budgeted great for the next year as well. To all investors, I want to acknowledge for your confidence, for your trust on Indogulf Cropsciences. Thanks a lot. Have a good day.
Thank you. On behalf of Indogulf Cropsciences Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.